Hello everyone. Last year was a remarkable year for investing, and despite some very big challenges, Aon KiwiSaver Scheme returns were strong. Let's have a look at the share markets and review some of the key themes we saw. This chart shows the calendar year returns for 2020, and I've focused in on the technology and financial industry returns as the extremes in the year. By a large margin, the best returns came from technology. Investors favoured tech companies that could benefit from the crisis, particularly those with disruptive business models. In contrast, the poor return of the financial industry was driven by lockdowns and lower future earnings expectations. But this chart hides a change in the last quarter, where some of the lagging companies started to catch up. This is because of the announcement of highly effective vaccines, and this was a game changer. All of a sudden, near-term vaccination rollout plans became real, and this gave support to the idea that we could be moving on from the health crisis soon. The result was industries that have lagged, such as financials, now achieved the strongest returns for the quarter. These returns are shown in blue. These influences helped global shares rise over 11%, with many lagging sectors, especially the financials, providing the strong finish. Let's look at the yields for New Zealand government bonds. The cash rate is blue, the yield of the 3-year government bond is orange, and the 10-year bond grey. And what this shows is that yields fell early in the year as the economic conditions worsened. These hit their lows in the third quarter when it seemed possible that the Reserve Bank of New Zealand could move the official cash rate negative. This pushed the yield of 3-year bonds to be negative as well, and this is the red area circled. And then just like share markets, bond markets reacted strongly to the vaccine news and have mostly risen to year end. With a strong year of return behind us, let's turn our attention to the future. And for the moment, the global economy continues to recover, although the pace has slowed. We see the rollout of an effective set of vaccines as essential to drive the global economic recovery in 2021. Already the number of vaccine doses given worldwide is more than 170 million, which is impressive given this effectively started only 2 months ago. This chart shows that the US has administered 54 million of these doses and is currently working on around 2 million doses per day. Whilst this is a great start, the number of doses remains pretty small compared to estimates for the doses needed to achieve a return to normal life. We estimate that the US alone needs over 450 million doses to achieve a 75% population coverage. Until that happens, the 2021 global recovery may rely on the pent-up demand from consumers who are unable or afraid to spend last year. Regardless, we think that government stimulus that provided the safety net so far must continue. Investment markets have a more challenging, although positive story. While global share prices are up strongly, economic activity remains way below its peak and profits remain down from a year ago. Also, the government stimulus dynamic in the bond markets seems likely to remain in place for at least the next few years, and this should keep yields low. We think this will lead to a bit of a pause in market returns so that the economic catch-up can happen. If you haven't looked at your Aon KiwiSaver Scheme investments recently, then maybe it's time to do so. Check out your account balance online or look at the investment returns on our website.